06 onwards this time. Okay, so remember again, there must be a sale of goods. Otherwise, there will be no VAT liability. Now, there are, of course, what we know of as transactions deemed sale under section 106, paragraph B. Okay, so even if there is really technically no sale transaction here, the law would consider the transaction anyway as a sale for purposes of the value-added tax. And it includes, notice in number 4, retirement from or cessation of business with respect to inventories only. So it's a qualified phrase here. With respect only to inventories of taxable goods existing as of such retirement or cessation. We have, of course, a bar problem on it. Okay, this is 2018. The question here is the transfer subject to VAT? What transfer is this? Okay, transferring all the assets of the business, particularly the inventory of goods on hand, machineries and equipment, okay, etc., here to the new corporation. Okay, so there is a change of business organization here, okay, from a single proprietorship to a corporation. Okay, in the second paragraph, here we are informed, okay, that as a result, the sole proprietorship ceased to do business. Okay, so there is really no sale of the inventory of goods on hand, machineries, and equipment. There is merely a transfer that came as a result of the cessation of the proprietorship. Okay, so going back to the provision, retirement from or cessation of business with respect to inventories, transaction deemed sale. Is the transfer subject to VAT? Yes, we can consider this as a transaction deemed sale and therefore subject to the value-added tax. Okay, so the basis of the assessment here on account of the cessation of business, okay, has a legal basis. Okay, once more, this is section 106, letter B, particularly item number 4 here. Okay. So yan, no? Tingnan natin. Walang sale, actual sale, pero meron naman transaction deemed sale. Ngayon, if it is a little bit different, say that the business is going to stop already. But unlike here, where Carlito will in fact continue on with the business, only this time through a corporation. Kasi magse-set up ng corporation, di ba? If it is a little bit different, such as titigil lang talaga. So with respect to the inventory of goods on hand, ibebenta talaga. Right? So unlike here, ito transfer, di ba? Doon naman sa kaso, titigil, tapos ibebenta na lang yung mga natitirang goods on hand and the machineries and equipment. Okay, so bakit ibebenta na lang? Kasi tigil na sa negosyo. Please do not anymore say that there will be considered in the foregoing transaction a deemed sale transaction based on the idea that there is retirement from or cessation of business. Ang tanong pa rin is VAT applicable, right? But it's not really because that there is a transaction deemed sale. If in the facts sinabi doon, binenta, there is not a deemed sale, but rather an actual sale going on. So it will really be missing the point. nakita lang kasi, ang kadalasan nagmamadali lang. Nakita natin that there is cessation or retirement from business. We apply right away, automatically in our minds, transaction deemed sale. When in fact, in the given problem, there is an actual sale being conducted. And still the question is whether VAT is applicable. Okay? So maaring, the most likely scenario there is the sale is for a selling price below the cost basis. So we already explained earlier that there may not be income actually realized from the sale, and still the VAT cannot be avoided only for that reason. So the sale would remain to be made in the course of trade or business. Okay, so be very careful again. Just because you see cessation of business, do not apply this concept of transaction deemed sale. There is in fact an actual sale happening. All right, so what are the rates of taxes here in 106 and 108? As you know, it is 12%. But this is not the only rate. This is not the only rate provided here. There is also in 106 number 2, export sales that are subject to a 0 rating. Okay, 0% rate. So know what an export sale may be. Ito ang usually asked. There is an actual shipment of goods from the Philippines to a foreign country. But these are still other examples of export sales. This is a definition of export sale by way of enumeration, subject to the proviso. Okay, in this part here after 3. Okay. In 108, with respect to sale of services, we also have 12% as the applicable, as the general rate, and also 0% rate in paragraph B. So again, enumeration. All right. Okay, number 3. Let me just highlight this because especially this part here, services rendered to persons whose exemption under special laws, because there are a lot more cases in our jurisprudence where the factual backdrop involves a services rendered to persons whose exemption under special laws effectively subjects the supply of services to 0% rate. All right. So what exemption is this about? Exemption under the special law or international agreement from indirect taxes. Okay, so the person is granted under the special law or maybe an international agreement to which the Philippines is a signatory, exemption from indirect taxes, so that whenever that tax-exempt person purchases taxable goods or services, the supplier of the taxable good or service should not pass on to that tax-exempt buyer the VAT. So how would that be facilitated? Not shifting on or passing on to the tax-exempt buyer a VAT simply by applying the rate 0%. Okay? So there would still be the gross amount, which is the consideration for the purchase. But the rate applied is 0%, resulting in no VAT that can be charged to the buyer. Okay, so this is because of the 0 rating. Now, where the service is rendered, here, the service is rendered here in the Philippines. So consumption of services takes place in the Philippines. Now, what about the destination principle or cross-border doctrine that we talked about at the start of this morning's lecture. Well, this particular instance where services are destined for consumption here constitutes a modification of that rule. But anyway, still, even where the consumption takes place here, no VAT will be passed on or shifted to the buyer just the same. And that is because of the zero rating of the transaction. Okay, so ano pa rin naman, consistent pa rin dun sa idea na walang karagdagang cost on the part of the buyer where the rate applied is 0%. But the transaction, or more particularly, the consumption of services happens here just by way of an exception to the destination, or perhaps a qualification or modification to the destination principle that we talked about earlier. Okay, so remember our discussion about that concept. Usually it is the goods or service that is destined for consumption abroad where no VAT is applied. And on the reverse, where goods or services destined for consumption here, that's where VAT is applied. Except in this particular example where even though the service is rendered here in the Philippines, still no VAT will be passed on to the buyer, but not because of exempting the transaction from the VAT coverage. It's still a taxable transaction, only that there is no VAT shifted to the buyer by applying the rate of 0% whenever that buyer again is entitled to an exemption under a special law or international agreement. That exemption must involve exemption from indirect taxes like the value-added tax. Okay, so this VAT that is due on the sale of taxable goods or services is what is known as the output tax. So therefore, the output tax could be a positive number or it could be zero, depending on the rate applied. If it is a taxable sale at 12%, then necessarily your output tax must be a positive number. Wala naman atang gross selling price na negative, okay, or zero. It's always a positive number. So if you apply 12% upon the selling price, then there is surely output tax arising from that particular sale. On the other hand, there will be zero output tax if your rate applied is 0%. In the case of export sales or sale of goods or the zero-rated transactions on services rendered, including those that are considered effectively zero-rated transactions. Whenever the buyer or purchaser of taxable goods or services enjoy exemption from indirect taxes, whether that may be provided in some special law or international agreement to which the Philippines is a signatory. Okay, so this is the output tax, okay, that we refer to, the VAT that is due on the sale of taxable goods or properties. What is this other term now? The input tax. The input tax is, as you can see here, the VAT due from or paid by a VAT registered person. Okay, from whom? It is from another VAT registered person. So you would have input tax only when the two parties to the transaction are both VAT registered. So the seller in that transaction between two VAT registered persons is liable for output tax on the sale of its supplies to the buyer, another VAT registered person. Because the VAT is an indirect tax, of course, the seller could pass on to the buyer, another VAT registered person, the VAT liability. Okay, so or the burden of the tax. At the same time that this amount of VAT, which is output tax to the seller, we consider the same as input tax as far as the buyer is concerned. So this VAT registered buyer is liable for input tax when it pays the VAT that is passed on to it, to this person, the buyer. The VAT is input tax. Again, it is simply the VAT due from or paid by a VAT registered person from another VAT registered person. Okay, so why do we have here output tax and input tax? Well, this is really in connection with the tax credit method that is utilized in the computation for the VAT liability. So that against the output tax of a person, there may be credited the so-called input taxes arising from purchases of taxable goods or supplies from VAT registered suppliers. All right, so if we have this simple illustration again, maybe we can just utilize, okay, nandito. Well, did we not say that Commonwealth Management Services Corporation is engaged in the business of providing accounting and technical services to different clients? So that even though these clients are also other affiliates of Film Life, it would not matter. The sale of service, since it is for a fee or remuneration or consideration, is a taxable service. Diba? Okay, so you have therefore gross receipts earned by Commonwealth Management and Services Corporation from the performance of its services to its customers. Even if in the end it will not generate really income or profit from its operations, since it will only be reimbursed for the cost of services it renders to others for a fee or remuneration, VAT still attaches based on Section 108 transaction. 108 on sale of services. But you see, the idea now is Commonwealth is liable for VAT, and so it should register. It should really be required to register under the VAT system when the activities the person engages in are taxable activities. Okay, so now we assume that this person is VAT registered. In providing services to others as its final product, kailangan may mga inputs din sa kanyang negosyo. So, Comaserco or a VAT registered person would have to procure supplies from others, or would have to require also services from others, which goods or services are inputs in its own business. So if these suppliers of goods or services of Comaserco are themselves VAT registered entities, the VAT that these suppliers will pass on to Comaserco in the procurement of its goods or services that are inputs in its own business, merong VAT na babayaran si Comaserco, yun yung mga input taxes niya. So how would now Comaserco pay its VAT? The output tax that is due on its sale of services will be credited with the input taxes paid to suppliers of its inputs consisting of goods or services. Eh, halimbawa, services, merong naman na kailangan na kuryente sa mga opisina ni Commonwealth Management, di ba? So the supplier of its electricity would be, say, Meralco, another VAT-registered entity. And so the sale of electricity to Comaserco is itself a VAT taxable service. And so when Comaserco pays for its purchase of electric power from Meralco, kasama doon yung VAT. So yun yung input tax as far as Comaserco is concerned that it can apply as tax credit. against its own output taxes. So in the same way, when Comaserco purchases, let's say, computer, okay, and other equipment that it will use in its business, in its offices, etc., then the VAT paid by SM Appliance or any other supplier that is also VAT registered will be creditable against its output tax. Again, input tax yan. Okay, this is the case of Comaserco, who is VAT registered. Pinagpapalagay natin na VAT registered. Okay. Although dito sa actual case, nagsimula yung kaso na yan, na hindi siya VAT registered. Sa paniniwala nga ni Comaserco na hindi siya liable ng VAT in respect to the gross receipts it earns or charges its customers for the performance of services. We are just using this page here as in our example para mas appreciate natin ano ang ins and outs ng VAT dito. Okay, so you have now input tax being paid by Comaserco from the purchase of its goods or services that are inputs in its business. We cannot, of course, dismiss the possibility of Comaserco also procuring goods or services from suppliers who may not be VAT registered. So yung mga purchases ni Comaserco from persons who are not VAT registered could not, of course, give Commonwealth Management any input tax. Dapat lang. Dahil nga dito sa ating definition ng input tax, this can only be secured or obtained from purchases of taxable goods or services from VAT-registered persons. Okay? So, anong mangyayari doon sa transaction? The purchase by Comaserco, a VAT-registered person, from a supplier of goods or services that is not VAT-registered. Okay, walang input tax nga doon. At the same time, si seller doon is not liable for any output tax if the seller is not VAT registered. And how may the seller not be VAT registered there? If the seller or supplier of Comaserco is engaged in business, it can be considered not VAT registered because the sales or gross receipts during the year for that particular supplier is not more than 3 million pesos. Hence, the VAT exemption under this subparagraph, double C na ha, this is after trade. After create. Okay, so it used to be double B before, by the way. So this is the new tax exempt threshold after the train, contained in double B before, but now double C na. Those whose gross sales or receipts do not exceed this amount will already know to be non-VAT registered because their liability will be percentage tax. So kung ang supplier ni VAT registered person like Comaserco is non-VAT, walang output tax doon sa supplier, at the same time wala ring input tax na babayaran si Comaserco. But there is a percentage tax applicable to the supplier as a non-VAT registered entity. And as we said, since the percentage tax is also an indirect tax, the burden may be shifted also to the buyer. So in that situation where the percentage tax is shifted to the purchaser or buyer, that amount that is passed on to the buyer, like Comaserco here, will not be treated as input tax because it is not, again, a VAT paid to the purchase of goods from another VAT-registered person. So malinaw lang, right? So walang input tax dyan, ha? Walang input tax. Now, if Comaserco is not VAT registered, again, Pagpalagay lang natin na wala siyang vatable activity. So if a person is, or rather, if a person is, let's say, not VAT registered, maaaring engage in business, but the gross sales or receipts in a year do not exceed 3 million. So nire-reverse natin situation. Assuming lang that Commonwealth Management Services is not vatable because its gross receipts in a year do not exceed 3 million. But its supplier of goods or services is, let's say, Meralco, with respect to the sale of electricity or electric power. Merong VAT doon na liability on the sale of electricity by Meralco to Comaserco, a non-VAT registered person. Okay, so as far as Meralco is concerned, the VAT due on its sale of electricity. Okay, this is the service rendered by Meralco providing electric service to a client like Commonwealth Management, who, for purposes of this illustration only, is non-VAT. That VAT, as far as Meralco is concerned, remains to be output tax. VAT due on sale of goods or services. Output tax pa rin yan. But insofar as Comaserco is concerned, who only for the purpose of this illustration is non-VAT, that VAT that is passed on by Meralco to it is not input tax. Okay? If Comaserco is non-VAT, again, we say it may be non-VAT because its gross receipts in a year do not exceed 3 million. Insofar as Comaserco, non-VAT person is concerned, the VAT passed on to it is not input tax because, as you can see from the definition, it means the VAT due from or paid by whom? The law says a VAT registered person. So bumabalik talaga tayo doon sa sinabi natin kanina. You can only have output tax and input tax when the two parties in a transaction are both VAT registered. As far as the seller is concerned, the supplier, the VAT due on the sale is output tax. But insofar as the buyer, another VAT registered, is concerned, the VAT passed on to it and therefore it pays is input tax. Okay? Para mas maisip, ano ang output tax? VAT due on sale. Ano naman yung input tax? VAT that is paid in the purchase. So that's how it is. So under the tax credit method now, the input tax is applied as tax credit against output tax. So here now, if Comaserco had paid VAT in the purchase of its inputs from VAT registered suppliers, all those input taxes may now be charged as tax credit against the output taxes of Comaserco. Again, it will not matter that out of its sale of services, no actual profit is realized. Maaring gross income niya sa operations is zero, pero meron siyang VAT liability dahil yung computation naman natin ng VAT is based on the amount of gross receipts. Okay, so it will not matter that the cost of services rendered is equal to such gross receipts or even below the amount of gross receipts. Okay, so sa computation natin ng VAT, inuulit ko lang para lang talagang ma-reinforce yung ating idea dito. The cost of goods sold or the cost of services rendered do not factor in our determination of the amount of VAT liability. In our computation of the VAT, it is always the gross sale or the gross receipt that is used in our computation. Okay, that's the basis anyway. Okay, so output tax less input tax equals your VAT payable. When the person is engaged in export sales, naturally, the output tax in the sale of goods that are actually shipped to a foreign country when goods are purchased by a non-resident who pays for unacceptable foreign currency denomination. So you see, there will be no output tax there. Zero talaga because of the rate being applied being zero. So hindi siya VAT exempt. Hindi siya VAT exempt, to be sure. It is still a sale in the course of goods, still a sale of goods in the course of trade or business. Yet no output tax is due only because the rate applied is 0%. Your seller remains to be a VAT registered person. Okay? Okay now? So, yan po. If this is the situation where the person is engaged in zero-rated transaction like an export sale, your output tax is zero, this could be the most likely scenario. The input taxes that our exporter had paid also cannot at the same time be applied as tax credit if the output tax there is zero, right? So if the output tax of a VAT registered person is zero because it is engaged in export sales, then the input taxes it paid in the meantime cannot be applied as tax credit. Creditable siya, pero hindi siya applicable yet as tax credit in the absence of output taxes. So what happens is, when you apply the tax credit method, input tax being applied as tax credit against output tax, pero wala namang talagang actual utilization in the absence of output tax, there will simply be excess of such input tax over the output tax. And there are two things that are contemplated in this paragraph. If at the end of a taxable quarter, the output tax is more than the input taxes, well, certainly that excess would have to be paid by the person. Okay, so for VAT purposes, by the way, the period is a taxable quarter. So in income taxation, we know that that tax period is one taxable year. It could either be calendar year or fiscal year. But the payment or computation is on a quarterly basis. But the tax period is not really a quarter, it is a taxable year. Here, for VAT purposes, that period is a taxable quarter. So the VAT paid every quarter is final in itself. The income tax paid in a quarter is not yet final because the quarter is not a tax period for income tax purposes. The taxable income that is subjected to the income tax rate is taxable income as determined on the basis of one taxable year. Right? So the income tax that is computed and may be paid in a quarter is just a tentative computation. Hindi pa yan final dahil nga i-consolidate pa yung income na yan with the rest of the incomes earned in the different in other different taxable quarters or for the entire year or for the same taxable year. Okay, so yan po, for VAT purposes again, the period is 1 quarter. And so the VAT that is computed per quarter is final in itself. So when there are more output taxes than input taxes in a quarter, the excess of the output tax is paid. But if it is the reverse, if there are more input taxes than output taxes in a quarter, at pwedeng mangyari yan kung ang output tax mo napakababa or zero pa nga. If purely the transaction entered into during the quarter is zero rated, ang output tax talaga doon ay zero. So, it's most likely therefore that you will have excess input tax. That excess is, according to this paragraph, carried over to the succeeding quarter or quarters. Okay, so what happens again? whenever input tax exceeds output tax, bakit mas maliit yung output tax? It could be that the transactions entered into by the person involved zero-rated transactions where the output tax is zero. Pwede pa rin naman positive number yung output tax. And we said just a while ago, you will have a positive number for your output tax if you have taxable sales at 12%. Necessarily, yung output tax mo talaga positive dahil pag in-apply mo ang 12% tax sa gross selling price, eh wala namang negative number na gross selling price, diba? It's always a positive number. You will really have output tax. Okay, so a person who has an output tax is necessarily a person who has a taxable sale at 12%. Okay? If a person's taxable sale is purely zero-rated, output tax is zero necessarily. But I am talking about a person whose sole transaction is zero-rated. As in the case of an exporter, kung wala siyang local sale, lahat ng kanyang transactions, export sales, eh di yung output tax niya lagi doon ay zero. Applying the rate of 0%. Okay? For those engaged in services, there may be sale of service here in the Philippines, a local sale, yes, but 0% would be applied whenever, for instance, the buyer of taxable service is a tax-exempt buyer, a tax-exempt person, by virtue of a special law or international agreement to which the Philippines is a signatory. So there you have an effectively zero-rated transaction. So if our seller is engaged in exclusively zero-rated transaction, the output tax would necessarily be zero. But it is also possible that a person may be engaged in mixed kinds of transactions. Meron siyang export sale at meron din siyang local sale. So if there are local sales subject to 12%, output tax may be a positive number. Yes. Combined with the export sales, where output taxes are zero, meron pa rin siyang output tax. Pero kung mas mataas nga yung kanyang input tax, just the same, okay, the portion that is not actually applied as tax credit, because again, output tax, wala na. Okay? That represents the excess, which is, according to this paragraph, I'm sorry, carried over to the succeeding quarter or quarters. In the succeeding quarter or quarters, those excess creditable input taxes are available as tax credits once more against output taxes. Okay, so now I'm talking about a person who has excess input tax. And it could be that the person is engaged in zero-rated and taxable sales. Pwede rin naman purely taxable sales at 12%. Wala siyang mga export sales, wala siyang zero-rated transactions. Pwede rin naman. Okay? So, kung ganyan nga, lahat ay 12% rated transactions, edi ang output tax niya talaga ay positive number. Right? But if there are, again, more input taxes, a portion of the input taxes will be utilized as tax credit to the extent of the amount of output tax during a quarter. The excess of its input taxes over the output tax in a certain quarter is what is carried over. That is the portion that is not yet actually applied as tax credit, but made available as tax credits against output taxes in succeeding quarter or quarters. Okay, now what becomes of this excess input taxes under the proviso? The excess input tax under this proviso may be refunded or credited against other internal revenue taxes. Ano ang limitations? Okay, under the procedure outlined in section 112. Now, this excess input tax is not every kind of excess input tax. It is only that which is attributable to zero-rated sales by a VAT-registered person. And, of course, this is merely optional. So may I repeat this? The input tax covered by this proviso pertains to those that may be attributable to zero-rated sales. So the applicant of a tax refund or issuance of a tax credit certificate under Section 112 should be a person engaged in zero-rated sales. It should be a person engaged in zero-rated sales. Without any zero-rated transaction, you cannot have excess input tax attributable to zero-rated sales. And it follows necessarily that whatever excess input tax there that a person may have, whatever excess input tax that this VAT registered person may have, that cannot be refunded under the procedure outlined in Section 112. Again, if that person is not in the first place engaged in zero-rated sale. So Section 112, therefore, is an application for refund or the issuance of a tax credit certificate only for persons who have zero-rated transactions, because only these persons may be able to prove that the input taxes it paid in the purchase of inputs are those attributable to zero-rated transactions. So you have export sales, maybe as the transaction in which the person is engaged in, the resulting output tax is zero, and during the quarter, it may have input taxes that were not applied as tax credit because of output taxes being zero. Yan yung ating applicant dito sa Section 112. Right? Let's go back to our example. Since nandito na rin lang tayo, ito na lang din ang gamitin natin. The services are rendered to other affiliates of Philam Life. None of them are exempt persons. Wala talagang exempt person sa kanila, whether by virtue of a special law or international agreement to which the Philippines is a signatory. Kasi yung mga kliyente naman niya would be other affiliates of Philam Life. Okay? So yung kanyang mga sales, yung kanyang sale of service would therefore be subject to 12% rate. Okay, so mayroong output taxes every time because the amount of consideration is always a positive number, right? So may output taxes niya. What happens when Comaserco has, in a certain quarter, more input taxes paid in the purchase of its inputs, whether taxable goods or services? The excess input tax will be available for crediting against output taxes in later quarters. May that excess input tax be applied for refund under Section 112? We are talking about who? We are talking about Commonwealth Management and Services Corporation. A person whose sale transactions are all 12% rated. Considering again that it has no export sales and it has no services rendered to tax-exempt persons. The excess input tax that Comaserco may have in a certain quarter may not be refunded under Section 112. Instead, the excess input tax may only be carried over to be applied as tax credit against output taxes in later quarters. So in short, let me remind you that 112 is not for everyone. This is not for every VAT registered person. This is only for those who have zero-rated transactions. The law requires that the amount applied for refund here must be a VAT paid, which therefore is, in the hands of the applicant, input tax. And not only that, it must be attributable to zero-rated transaction. Paano mo maipo-proof na yung input tax is attributable to zero-rated transaction? if to begin with, the person had not actually engaged in export sale or in any other qualified zero-rated transaction. Alright? So, yan. Pero kung ikaw si, halimbawa ito, kung ikaw si Mindanao, geothermal, kung ikaw yan. Alright? Si Mindanao po, meron siyang client. A buyer of its generated electric power is Napocor. Okay? So si Napocor po ang kanyang buyer. So anong mangyayari doon sa sale ni Mindanao Geothermal of electricity to Napocor? Napocor is under its charter. Okay? Bago pa man pumasok ng IPIRA nung inabolish yung kanyang generation business. Napocor is exempted from taxes, not only direct taxes, but also indirect taxes. So a number of cases had been decided by the Supreme Court interpreting the tax incentives enjoyed by NPC. And that included exemption from indirect taxes. So when a sale is made to Napocor by a VAT registered person, that sale becomes zero-rated. Okay, so while you may have a sale taking place here in the Philippines, but considering the service is rendered to a person who is exempted from indirect taxes under the special law, the charter of Napocor itself, the transaction is effectively zero-rated. So Mindanao therefore has zero-rated transactions, the sale to Napocor. Ito yung example ng application natin ng input taxes that are paid by Mindanao to different VAT registered suppliers, but which Mindanao may not be able to apply as tax credit in a certain taxable quarter, when in that taxable quarter, output tax may be zero as a result of its sale transactions being exclusively to Napocor, a tax-exempt entity. So the excess input tax here is now the kind of input tax that you may consider as attributable to zero-rated sale. So this excess input tax is, according to section 110 under this paragraph, is carried over to the succeeding quarter or quarters to become available as tax credit, even though the input tax is attributable to zero-rated transaction. Available yan pa rin as tax credit against output tax in later quarters. But if the person is engaged purely in zero-rated transactions, you would naturally expect this person to not anymore await for succeeding quarters with the intention of applying the excess input tax that happens to be attributable to zero-rated sale to apply the same as tax credit, when it is to be naturally expected also that in the succeeding quarters, no output tax will once more be due, considering again that the seller, our taxpayer, is not engaged in 12% rated transactions. Perhaps yung ating input tax that may be attributable to zero-rated sale, that the VAT registered person may also be interested in simply carrying it over to the succeeding quarters, is the situation of a VAT registered person who is engaged in mixed transactions. Merong sales at 12%, merong sales at 0%. The excess input tax attributable to zero-rated sales, pwede niyang i-apply as tax credit against output tax as a result of applying 12% on some of its transactions. Pwede niyang gawin yon, yung excess input tax, i-carry over na lang sa succeeding quarters with the intention of applying the same as tax credit. If there is, of course, expectation that in the succeeding quarters, there will be a positive number for output tax because of the application of 12% rated sales. Pero yun nga, kung ang transaction lang na pinapasukan ng ating VAT registered entity is zero rated, walang 12% rated, hindi yan Well, we can expect that the excess input tax can only be applied for refund or the issuance of tax credit under Section 112. But this is not me saying that 112 is only for VAT registered persons whose transactions are exclusively zero rated. Hindi ko naman sinasabi yan. 112 may be relevant also to persons who have zero rated transactions and maybe 12% rated transactions also. But the refundable amount always must be the excess input tax attributable to zero rated sale. Whatever excess input tax that may be determined to be attributable to 12% rated sale cannot be refunded under here. The only way to recover that is for it to be carried over first to the succeeding quarters and therein applied as tax credit against output tax, of course, not any other national internal revenue tax. Okay, so that's how it is. Since I had opened here 2 cases, I am just using this cases in front of you as my example in presenting to you the scenario where there may be output taxes at 0% or 12%. Dito sa kaso ng Commonwealth, 12% yan. Dito sa kaso ng Mindanao, on its business of generation of electricity, it may be possible to apply 0% where the buyer is like NPC. Okay? Pero sa kaso dito, yung isang kinonsider natin, in the sale of motor vehicle, of course, the buyer is not necessarily NPC, but some private person, well, that may become now a taxable sale at 12%. Kaya nga, yung VAT due on the sale or on the selling price should be reported in the VAT return of Mindanao. And what that VAT is, it's output tax from the sale of the motor vehicle. It is a positive number because the applicable rate in the sale of its motor vehicle is 12%. Unlike the sale of its electricity to NAPOCO or another tax-exempt person, which is zero rated, the output tax there must necessarily be zero as well. Okay, so in this situation, I am also giving you the idea that Mindanao may be engaged in mixed transactions, zero rated and 12% rated transactions. So it may have excess input tax that you must be able to identify as attributable to taxable sales at 12 or taxable sales at 0%. The relevance may be found in the availability of the excess input tax for refund under 112. So for those input taxes attributable to zero rated, available for refund under 112, but for those excess input taxes attributable to 12% rated sales, not refundable under 112, although available for tax credit until fully utilized in the succeeding quarter or quarters. Okay, so that's it. So you have now the procedure in section 112, and many of the bar problems so far that we had seen are based on section 112. I'm not saying all, ha? Okay, kasi kanina sa nakita natin, di ba, is the transfer subject to VAT. 106 naman yan. Okay, so kaso ng MKI kanina, masarap kumain, is the sale of the delivery van subject to VAT. So basic idea pa rin, whether the sale is in the course of business or not. Okay, pero may mga problems din naman that involve section 112, and there are many of these. Okay, so please, let's review what do we have here in section 112. The application here requires the filing first of a written claim for refund. This is the administrative remedy provided in this section. The written claim for refund must first be filed with the Commissioner of Internal Revenue. And this is subject to this period, prescriptive period of 2 years. All right. Now, the counting of this 2-year period is from the close of the taxable quarter when the sales were made. So it is not from the filing of the tax return or the date of payment as the reckoning point of the 2-year period. Rather, it is the close of the taxable quarter. Okay, so this is one thing. Next, once that application with the commissioner is made, complete with all the documentary requirements like the VAT, official receipt, or sales invoices, there is commenced the running of another period. That is the 90-day period, which is the period given the commissioner. Okay, it's here. The period given the commissioner to act on the application, whether to grant it or maybe to deny the application, whether in full or partial denial. Okay, so that's another period. 2 years from the close of the taxable quarter, and then you have 90 days from the date of submission, okay, for the commissioner to act on the application. Now, if there is denial, the taxpayer affected in the case of such denial, whether full or partial, has this remedy of appealing the decision with the CTA. So this is the other kind of claim referred to in this law, which is a judicial claim. Earlier, that written claim with the commissioner is the administrative claim for refund. Now, this appeal to the CTA is your judicial claim, and it always follows an administrative claim for refund. Okay, the law here provides for a 30-day period of time, and it is counted from receipt of the decision. Now, just to be sure, the 2-year period here referred to in the first paragraph refers to the prescriptive period of the administrative claim for refund. Whereas in paragraph C, the 30-day period here, which is counted from receipt of the denial of the claim, pertains to the prescriptive period for the judicial claim. So the 2-year period above cannot be considered as affecting the timeliness of the judicial claim below. The judicial claim is always subject to the 30-day prescriptive period. Okay, so in the bar exams, therefore, you have these possible questions. Number 1, relating to the timeliness of the administrative claim for refund. And number 2, the question may be about the timeliness of the judicial claim. Please follow the corresponding rules. As to the timeliness of the administrative claim for refund, 2 years from the close of the taxable quarter, not from the date of payment, not even from the filing of the VAT return, but from the close of the taxable quarter when the pertinent sales were made. The pertinent sales must be the zero-rated sales, for anyway, the input taxes, the excess input taxes that are applied for refund must be those attributable to zero-rated sales. Whereas a judicial claim, as we already said, it is subject to this prescriptive period of 30 days. Nothing here is mentioned about the judicial claim being subject to the 2-year prescriptive period. Magkaiba yung kanilang prescriptive period. Okay? Nothing in this part of the law requires that the judicial claim should be filed within 2 years. So if it is about the timeliness of the admin claim, 2 years. Ang nasa isip natin dapat. Timeliness ng judicial claim, always a 30-day period of time without regard to the 2-year period. So that we may consider as timely a judicial claim, which is again in this paragraph, the appeal with the Court of Tax Appeals. We may consider as timely the judicial claim even if it falls outside of 2 years. That's the consequence of our earlier statement that the 2-year period affects the administrative claim only, not the judicial claim. So it could be that the judicial claim itself falls outside of 2 years. It may still be considered timely as long as it is made within 30 days from the denial of the claim. Okay? And it is possible, just to give you an example, the most extreme situation here is that the administrative claim for refund is filed on the very last day of the 2-year period. Okay, so the the administrative claim for refund would still be considered timely under such a situation if it is again filed on the very last day of the 2-year period. Necessarily, the judicial claim should fall outside of the 2-year period. Again, as we said earlier, it may still be considered timely so long as that judicial claim, which is now outside of the 2-year period, is filed within 30 days from the denial of the claim. Now, on the reverse, it may be possible that a judicial claim is not timely, even if it falls within the 2-year period of time referred to in section 112. How may that happen? Of course, when the judicial claim, which is again the appeal with the CTA, falls outside of 30 days counted from the denial. So in a situation where it may even be falling under the 2-year prescriptive period, such as in the case of Stig State Power, the latest case decided by Justice Leone. Stig State Power Corporation. Okay? An applicant there Stig State Power Inc. O, ayan, no? Power na naman yan. Engage in business of power generation. Kasi sila yung may mga zero-rated sales. Eh. Sila yung may sale to Napocor. Okay, for instance, that the law qualifies as effectively zero-rated. Kaya sila ang pwede magkaroon ng excess input tax attributable to zero-rated transaction. Okay, pero ang tanong dito, kung timely pa ba yung judicial claim ni Stig State Power. When according to Stig State Power, it was filed within 2 years from the close of the taxable quarter. So as we were discussing earlier, it's possible that the claim with the CTA, which is judicial claim, is filed within 2 years, but no longer timely when it is filed beyond 30 days from denial of the claim. So in such a situation, pumasok yung admin claim within 2 years, pumasok din yung denial within that period of 2 years. Pwedeng ang appeal sa CTA eventually is also falling under the 2-year period, pero more than 30 days already from the denial. May problema tayo doon. Okay? So, just to review, what is the situation all about? It is a case of timely administrative claim for refund. Why timely? Because it was made within 2 years. But judicial claim is not timely. Why not timely? Because it was filed beyond 30 days. Even if such filing with the CTA falls within 2 years. Okay? So yan ha. Kanina uli. Pwede ba ang appeal sa CTA outside of 2 years? Timely pa din? Yes, as long as within 30 days from denial. Okay, so timely ba yung admin appeal kanina? Timely because it was made within 2 years. And we even considered the filing of the administrative claim for refund on the very last day of the 2-year period. So just to illustrate, for this particular quarter, ano ba ngayon? August, di ba? Third quarter ngayon. Matatapos po yung third quarter for those employing the calendar year basis by August, rather by September 30. Parang sigurado lang ha. Ilang days ba? Okay. 30 days lang sa September. So the close of the third quarter 2021 will be September 30. Okay, so this would mean that any excess input tax attributable to zero-rated sales for the third quarter of 2021 may be applied for refund with the Commissioner's Office until until September 30 of 2023. September 30, 2023. Pag final yung admin claim with the Commissioner September 30, 2023, timely yun. Okay? So now, under Section 112, from the submission of this application, together with all the other documents, supporting documents, there will be a 90-day period of time that will commence to run. And this is for the Commissioner to act on the application. Supposing that a denial is rendered, or a decision is rendered denying the claim, then the appeal, which is now the judicial claim, should be initiated within 30 days thereafter. Okay, so necessarily that appeal with the CTA falls outside of the 2-year period, but still timely. Okay? So, yan uli ha, yung ating mga timeliness. Timeliness for the admin claim is different from a question on the timeliness of the judicial claim itself. Now, we said earlier that each taxable quarter is the tax period, and the VAT determined and computed per quarter is final itself. By final, it need not be consolidated with the other VAT due in other taxable quarters. Magkakaiba, syempre, yung ating treatment. They separate yung VAT in a quarter from the VAT in another quarter. Okay, so in a calendar year, for instance, there are 4 quarters. 4 yan. 4 separate VAT liabilities. The computation of the VAT per quarter is final in itself. Kaya, pagdating sa application din, the application for excess input tax under this procedure in Section 112 for every quarter is separate from the other application for excess input taxes for the other taxable quarters, even though falling under the same calendar year or fiscal year of certain corporations. Okay, para lang malinaw magkakaiba. But there is of course no preventing a VAT registered taxpayer from applying for refund its excess input taxes for all quarters in a year. Eh, pwede rin naman niya ipagsabay-sabay. Okay, halimbawa dito. Hindi. Okay, itong ating okay, pinaghiwa-hiwalay niya yung kanyang mga administrative claims for refund for every quarter over. Okay, fiscal year ito. Kaya iba-iba yung kanyang application. But again, as I said, there's nothing to prevent a taxpayer from applying for refund all excess creditable taxes in a certain period. And this is where you have to be very, very careful about. When the application with the Commissioner is filed but covering all 4 quarters in a year, you have to determine also the timeliness of the refund claim for every quarter there. Okay? So, halimbawa ngayon ay August 7, 2021. Okay, let's pretend that a taxpayer applicant uses the calendar year. So let's talk about the excess input taxes for the taxable year 2019. Okay, so this is an application for refund of excess input taxes for the entire year 2019, which of course closes on December 31, 2019. If this application for refund with the Commissioner is filed today, August 7, 2021, would you consider this claim timely? So using the rules that we had here discussed in Section 112. So you always count the 2-year period from the close of the taxable quarter when the zero-rated sale was made. So considering that there are 4 quarters subject of this application, 4 quarters in the year 2019, each quarter must be treated separately. If the date of claim is today, August 7, 2021, the claim will be timely because it is within 2 years, only in respect to the first 3 quarters of, or rather, only with respect to the last 2 quarters of 2019. Let's check. The first quarter of 2019 closes March 31, 2019, and therefore the 2-year period expires March 31, 2023. But today, the filing of the written claim is already August 7. So that's way past the deadline or the prescriptive period until March 31. So with respect to the second quarter of 2019, subject of our application for refund today, August 7, also that claim had expired already as of today because that 2-year period ended June 30, 2021. So what may be considered timely only today is the claim for excess creditable tax pertaining to the 3rd and 4th quarters of 2019. As to the 3rd quarter, that 2-year period will end on the last day of September, so September 30. Okay, whereas the 4th quarter, the claim may be filed until December 31, 2021. Okay, meaning to say, since it is a holiday and the following day, well, the written claim for refund may be filed until January 2, 2022. Okay, kaya lang August 7 pa nga. Okay, August 7 pa nga yung ating date of filing of the administrative claim for refund. So it is timely, therefore. Okay, let's pretend that this is, again, your administrative claim for refund today, August 7, 2021. If you were the commissioner, you are supposed to deny the application with respect to the 1st and 2nd taxable quarters of 2019 only. What you might entertain is the refund application only with respect to the 3rd and 4th. Okay? Supposing that there is a denial of the claim for refund. Denial muna tayo, an actual denial of the refund claim. If it happens, let's say the denial happens, let's say September 30. Okay, September 30, 2021. Okay, August 7 to September 30, just a little over a month. Okay, so around 40 days. Okay, so tingnan natin. Which is within the 90-day period of time given the commissioner to act on the application. Okay, so if it is September 30 then as the date of receipt of the denial, the taxpayer now can resort to that judicial claim because he is adversely affected by the decision of the commissioner. However, that should be done within 30 days from receipt of the decision, meaning from September 30, 2021, you have 30 days. You have until October 30, therefore, to go to the CTA on appeal. So your judicial claim, let's say on October 10, halimbawa, October 10, that is considered a timely appeal. Okay, that will be considered as a timely appeal. If there is no decision this time, let's say there is no decision. Let's find out. October 10, 2021. Today is August 7, the date of claim with the commissioner. Okay, the law says within 90 days, mayroong period si commissioner to act on the application. Pero walang decision so far, ha? Let's just say that an appeal is taken to the CTA October 10. Okay, Okay, how many days are this from August 7 today, the filing or submission of the application? September 7, okay, 30 day, 31 days na nga eh. September, October. So that's basically around 60 plus days pa lang. Okay? Around 60 plus days pa lang from the time of submission, August 7 until October 10, hindi pa kumpleto pala ang 90 days. Okay? So if an appeal is taken to the CTA without any decision, but before the expiration of the 90-day period of time, the appeal will not be considered timely. Why it is not considered timely? The law says again that the appeal to the Court of Tax Appeals must be filed within 30 days. This 30-day period is counted from the denial. And so if there is no denial yet, since the commissioner still has how many more days left? Okay, around 30 days more left to complete the 90-day period of time. Okay, there is no such 30-day period of time yet to speak of. Hindi pa nga yan nag-commence to run kung wala pang ang denial. So it is simply a case of prematurely filed appeal with the CTA. Again, if it is filed within the 90-day period of time without any decision, it is to be dismissed, and the reason for the dismissal is lack of jurisdiction, consistent with the doctrine of exhaustion of administrative remedies. A prematurely filed appeal in this case is dismissible for lack of jurisdiction. So in many cases, the court had ruled on the mandatory and jurisdictional character of the waiting period. Of course, the many cases there that I'm referring to are cases applying the old 120-day period prior to the trade law. Okay, pero wala namang pagbabago yung ibang principles dyan. Okay. Yung mandatory and jurisdictional character of the waiting period is still good today, even with a shortened period of 90 days only. So ganun pa rin ang magiging consequence natin. Right? So when a prematurely filed appeal is taken to the CTA, it is dismissible for lack of jurisdiction. Hindi pa nga nagsimula nga yung 30-day period of time kung wala pang denial of the claim. Okay? Now, if there is denial, as we have said earlier, ang judicial claim ay hindi nga naman hindi ulit timely if appeal itself is taken beyond 30 days. And we already explained that earlier. Even if it may fall under the 2-year period, just like the case of state power. Okay? So, okay, that is about okay, the timeliness of the judicial claim. Now, you have some cases there involving prematurely filed appeals that the court considered anyway timely, but these are all appeals taken to the CTA that fell within the window period from December of 2003, December 10, 2003 to October 6, 2010. What are those two dates? That December 10, 2003 happens to be the date when this BIR ruling was issued, stating to the effect that taxpayer applicants did not anymore await the expiration of 120 days before filing an appeal with the CTA. Okay, so ito yung BIR ruling that taxpayers had utilized as basis for filing appeals with the CTA even before the lapse of the 120-day period. Okay, so pinayagan yung mga prematurely filed appeals because of this BIR ruling. But only until October 6 of 2010 when the case of IEG was promulgated. in this case of IEG, Forging Company of Asia, the court discussed the mandatory and jurisdictional character of the 120-day waiting period. So at this point, it was already made clear that no prematurely filed appeals may be entertained because this is a mandatory and this is a mandatory period, and it is jurisdictional in nature also. Okay, so the rule is prematurely filed appeals must be dismissed for lack of jurisdiction, except only this window that was created by the court's pronouncement in now what we know to be 2013 decision of San Roque Power, consolidated with the other cases of Taganito Mining and Felix Mining. Okay, so the window that was created here was the issuance of that BIR ruling number the A489-03 and the IEG date of promulgation. So yun lang, yung mga prematurely filed appeals considered timely. Okay, before this period and after, okay, all prematurely filed appeals must be dismissed for lack of jurisdiction. Okay, so siguro, applying nga yung ating present 90-day period. Of course, parehas pa rin yung magiging consequence. An appeal taken October 10, 2021. In our example, where the date of filing the administrative claim for refund is August 7, 2021. Okay, that should be prematurely filed appeal. Okay? Delivery. You have to excuse, okay? There's delivery. Okay, that is my son. All right. It's real. Okay. All right. So what if there is expiration of the 90-day period of time, just like in the many cases that you have read so far? Expiration of 120 days without any decision rendered by the commissioner. All right. With respect to these appeals, administrative claims for refund without any decision rendered by the commissioner or his authorized representative. Here's my take on this. Even with the amendment of Section 112, shortening the period from 120 to 90 days and seemingly taking out the provision about inaction, the expiration of 90 days will bring about a case of a denied claim. Okay, again, this may not be a unanimous view. Okay, we don't have yet any actual decision by the Supreme Court. Okay, bagong-bago pa lang naman ang trade law. But nothing else has been changed by even the trade law about the declaration or pronouncement by the Supreme Court in various cases interpreting this part of RA 1125 as amended, RA 9282. Okay, the portion that San Roque in 2013. Okay. Can you excuse me for a while? Okay, 5 minutes only. Excuse me for a while. Still, in the case of San Roque, if you have seen this portion, okay, so the inaction shall be deemed a denial, right? Expiration of 120 days, okay, which is for purposes of the train law, similar to the expiration of 90 days that we are considering at this point, okay, it should be considered as inaction deemed a denial. Okay, that part of Section 112, kahit na tinanggal yan, hindi naman ito naapektuhan eh. RA 1125 as amended by RA 9282. So the inaction after the expiration of 90 days, applying again the interpretation by the court on this part of RA 9282. Okay. RA 9282 ulit. Section 7, A number 2. Inaction deemed a denial is not amended by the train law. It remains as is. And so the expiration of this specific period, which is in this case 90 days, will bring about a case of inaction deemed a denial. And therefore, that is also a cause of action that the taxpayer may raise before the court after exhausting the administrative remedy of filing a written claim for refund. This certainly can be an avenue for the taxpayer to go to court via appeal with the CTA. So what may be appeal to the CTA? That would include inaction by the commissioner, which inaction is deemed a denial. So what you are appealing is a deemed denial decision of the Commissioner of Internal Revenue. So I propose therefore that even under 112, there could be judicial claims for refund in the absence of actual decisions rendered by the commissioner or his authorized representative, though that may be a possible case for the BIR officer to be penalized for his failure to act on the application. Now we know that there is that penalty, or that there is an offense for the failure on the part of the BIR officer to act on the application. It's possible only. But as far as the taxpayer applicant is concerned, there may be an appeal with the CTA following the denial, though the denial may be actual or, according to this, Section 7A number 2, a deemed denial decision only. Again, I am just saying here that it may not be a unanimous view, and we will soon find out if an actual decision is rendered by the Supreme Court interpreting the new Section 112 that shortens the period to 90 days and seemingly taking out the text about the inaction of the commissioner or the failure to act or expiration of 90 days. Okay, so whatever it is, the actual decisions that we have talked about inactions deemed a denial, if they may be asked in the bar exams, a situation where there is no actual decision. For me, it's still safe to rely on San Roque that considers inaction as a deemed denial decision and therefore appealable to the CTA justicing. Okay, so that is again Section 112 for you. Now there are other Leonen ponentials here pertaining to VAT refund applications under 112. Not only state power, meron pang apat na iba pa. Okay, so in state power, we talked about the timeliness of the judicial claim. It may not be timely even if falling within 2 years. Okay, even if falling within 2 years, if the appeal to the CTA is taken more than 30 days from the denial. Okay, more than 30 days from the denial. Okay, other cases pertain to the Timeliness still of the and by the way, state power is the case, okay, similar to the case of Felix here, a belatedly filed appeal, even if falling within 2 years. Belatedly filed because it was filed beyond 30 days from inaction deemed a denial. Yan yung kaso ng Felix Mining. Itong kaso ni San Roque at saka Taganito, they are both prematurely filed appeals. Yung kay San Roque was considered as not timely, yung Taganito, timely. Paano nangyari? Pareha sila prematurely filed appeals. Meaning to say, both filed within 120 days without any decision. Because the case of Taganito Mining fell within the window period. Okay, the window period from December 2003 to October of 2010, where prematurely filed appeals are considered timely. Yung San Roque kasi, na i-file yung appeal niya sa CTA before December 2003 or before the issuance of that ruling stating that taxpayers need not await anymore the full expiration of 120 days before filing an appeal with the CTA. So San Roque therefore cannot say that it relied upon the BIR ruling in filing its appeal with the CTA within the 120-day period, because at the time it filed such appeal with the CTA that incidentally or coincidentally fell within the 120-day period, no such BIR ruling was yet issued. Okay. All right. So, what else? Ang sumunod na kaso, okay, backtracking, state power is the latest one. We also have the case of Team Energy. Leonen. This is in March 14, 2018. Okay. The important portion here that we can add to our bank of knowledge is the matter about substantiation. So not only would the taxpayer prove that its administrative claim for refund is timely made, but it also has to prove that it had actually paid VAT in the purchase of its goods or supplies from another VAT registered person. And what would be the evidence to show that it has excess creditable input tax, the VAT that it had paid to a supplier which it was not able to utilize as tax credit against its own output tax? It would depend upon the kind of purchase. If it is a purchase of taxable goods, that must be a VAT sales invoice. That is the evidence to show, again, the fact of payment of a certain amount as input tax. If it is a purchase of services, then the VAT that was paid in the purchase of service must be evidenced by a VAT official receipt. Now, these two documents cannot be interchangeable. This is the doctrine here. So when one proves the fact of payment of VAT in the purchase of goods, the evidence that would have to be attached in the application for refund, again, to prove that that amount was paid, it should be a sales invoice. On the other hand, if it is a purchase of taxable service, VAT official receipt is the document there. Huwag magkabaliktad. Again, because the doctrine here is it is not interchangeable. Okay, so maybe, who knows, in your problem, there is an application for refund of excess creditable input tax, but it refers to the purchase of goods, and the document attached as proof of its payment of VAT is official receipt or VAT official receipt. If you were the commissioner, will you grant the application for refund? I will not. Okay, for failure to prove the fact of payment. Bakit? Isa-set aside mo kasi yung VAT official receipt. If it is not the proper substantiation, then you will set it aside. The claim of input tax as tax credit, therefore, must be unsubstantiated. Unsubstantiated. Okay, so that is a concept that you will find incidentally in section 113. Okay, in section 113 on invoicing, you will see the text wherein the text of the code where you will, of course, see the operative word here, or to differentiate a VAT invoice from VAT official receipt. Pinaghihiwalay sila eh. So as the court would explain, in the case of Team Energy, there must be a reason why our law is drafted in such a manner as to differentiate, as to separate one from the other. Just to, again, emphasize the point here that they are not interchangeable. Okay po. So 113 po. And then before I proceed, okay, to the others, I know that I have, okay, hanggang 12 o'clock lang, but may I be given an additional time here? 114 po, there's no need for me to emphasize, okay, the need for the filing of a tax return for every quarter. Okay, we've said that already, although we have not stated yet the time, okay, stated in the law for the filing of the return. So it is within 25 days following the close of each taxable quarter. In 112 earlier, the 2-year period is counted not from the filing of the VAT return, as we've said, but from the close of the taxable quarter. Okay, there is withholding here. The withholding that we had talked about in our discussion before is also applied here, but only in respect to the government procurement. We've already talked about this in advance before in our discussion of the concept of withholding, but it is best to reiterate it here. The withholding happens in the case of government procurement and in the case of payment for the lease or use of properties by whom? Okay, by our lessees here with respect to rights or property of non-resident owners. The full rate of 12% is even applied here. Okay, that's the most effective mechanism in assuring the payment of the VAT by non-resident owners, because they are not, kaya nga non-resident sila, they are not here. Okay, so the full rate of 12% is withheld. In the case of government procurement, it is only the rate of 5% that is applied, and the withheld amount is to the seller who is VAT registered, creditable against its VAT liability. This is not anymore a tax credit of input tax, but a tax credit of the withholding tax applied by the government as the buyer of taxable goods or services. Let's be able to differentiate the use of the word tax credit here. The 5% that is withheld by the government, which is the procurer of taxable goods or supplies, is a tax credit against the VAT due from the seller. Not in the same sense as input tax that is applied as tax credit against output tax. In fact, nag-compute ka na eh. How much is output tax less tax credit of input tax? That is your VAT due. But your VAT payable is the result of applying the 5% withholding tax here as tax credit against your VAT due. It used to be final withholding before, but as you can see after the train, okay, beginning January 1, 2021, okay, the final withholding tax shall be converted into, okay, or there will be a shift to withholding to creditable system already. Okay, just for your information, the withholding tax here used to be creditable, and then it was shifted to final, and now beginning January 1, 2021, balik ulit sa creditable system. Alright, so yan na lang. And then if I may go back, okay, to 111, just for your review, we have two kinds of input taxes here, presumptive and transitional. Transitional is relevant to every person who is newly VAT registered. Okay, and it is taken from the inventory of goods. The amount of transitional input tax may be the amount that was actually paid in the purchase of such inventory of goods, or it may be simply 2% of the value of such inventory of goods. Whichever is higher, that is the amount of transitional input tax. Now, who are these persons entitled to the transitional input tax? It may be any business. It may be any business, but the amount of transitional input tax is limited only to the very first beginning inventory of goods. From the commencement of business, okay, from the registration, okay, yung newly established business would have a transitional input tax based on the beginning inventory of goods. Again, this is for any kind of business until the amount is fully utilized. That's when you can apply the transitional input tax. During the, if we are to borrow the term here, transition period from non-VAT status to VAT status, but only limited to that transition period. Okay, hindi yan 1 quarter, hindi rin yan 1 year. Wala naman tayo nakikita dito. That such transition period from non-VAT to VAT is only good for 1 year. Okay, it may even extend to more than a year. But the amount that is taken from the beginning inventory of goods, again, it may be the VAT actually paid on such goods, or it may be simply 2% of the value. Yan yung ating transitional that can be credited until fully utilized, right? But the presumptive input tax is only available to certain businesses, those that are engaged in the law says processing of sardines, mackerel, and milk, and in the manufacturing of refined sugar and cooking oil. Okay, until when? While the business is ongoing. Okay, hindi lang during the so-called transition period. Hindi, it may well extend, okay, past that. In fact, while the business is a going concern, presumptive input tax is available to these only limited types of businesses. Presumptive lang yan, the input tax is not actually paid in the purchase of supplies and materials. Because again, here you have businesses who might be procuring supplies from what? Suppliers who are not liable for VAT because the transaction, the sale of food products in original state are VAT exempt under Section 109. Okay, which leads us now, going back to 109, to some non-exempt transactions. Ito nga yung unang nabanggit ko. Okay, your food products in original state, the subject of this sale transaction, regardless of the amount, the transaction is VAT exempt. No VAT, therefore, will be charged on the amount. To the purchaser, there will be no additional cost in the form of VAT. But these VAT exempt transactions should not be treated the same as what we had mentioned a while ago about zero-rated transactions. Magkaiba yung zero-rated sa exempt. Yung zero-rated taxable, yung exempt transaction, ay hindi siya talaga taxable. Okay? When a person is engaged in exempt transaction, no VAT will be charged on the sale itself by express exclusion or exemption under the law. But what happens to the input taxes that are paid by our seller to suppliers who are themselves VAT registered? So please imagine again, you have a VAT registered person, okay? A VAT registered person can be engaged in exempt transactions. With respect to certain transactions like this, ikaw man ay isang VAT registered, you are selling food products, pero original state, in the supermarket, for instance. And you may notice this in your receipt. Okay. May mga itemization doon. Ano ang mga VATable sales? Meron doon zero rate. Meron din exempt. So who is the seller? Maybe a VAT registered person. But it can be engaged in exempt transactions like 109 number 1 letter A. Okay. Now this person, the seller, is VAT registered. Meron siyang mga supplies na kinukuha sa iba. And let's say that they are also VAT registered. What happens to the input taxes paid? And which input taxes paid to suppliers that can be attributed to such exempt transactions? What happens to the input taxes paid, but which may be determined as attributable to exempt transactions? Hindi sila creditable. Unlike the input taxes that may be attributable to zero-rated or 12% rated sales of the seller, they are creditable input taxes. So whatever VAT payments made that may be determined as attributable to an exempt transaction of a VAT registered person, not available as tax credit against output tax. That's where we can now find the distinction or relevance of the distinction between an exempt transaction from a taxable sale, whether at 0% or 12%. Okay? As far as the buyer is concerned, well, you can argue, walang diferensya yung zero-rated sa exempt transaction. As far as the buyer is concerned in terms of total cost. Kasi parehas pa rin. Whether the sale is at 0% or exempt transaction, walang additional cost in the form of VAT. Okay, as far as the buyer is concerned. But as far as the seller is concerned, a zero-rated transaction is different from an exempt transaction. Okay, one is taxable, the other is not. And therefore, in respect to input taxes, those attributable to zero-rated, creditable, and may even be refundable under the procedure in 112. But any paid input tax that may be determined to be attributable to an exempt transaction, as we've said, not tax credit against output tax. Okay, so there are many specific transactions here. There are so many of these specific transactions. There's really no other choice except to just go over the listing here, know what these transactions that are given an exempt treatment, because in the bar exams, of course, the question, as we've said, is whether VAT is applicable. Actually, this is your initial approach. You have to test the applicability of an exempt transaction in 109 against that case problem before you. If you're convinced that there's a sale in the course of trade or business, in the facts, whether it is the conduct of the primary activity or simply an incidental transaction, it is a sale in the course of trade or business, in general, it must be taxable, except only when the transaction may come under any of these subparagraphs. Okay, a fish vendor would have as his primary activity the sale of marine food products. Okay, is it a sale in the course of trade or business as far as the fish vendor is concerned? Yes. But the transaction is VAT exempt under paragraph A. Okay, in the same way, you have a real estate dealer. A real estate dealer selling real properties in the course of trade or business will be generally liable for a VAT. It may be at 12% or some, you never know if the purchaser is tax exempt, zero-rated, who knows. But if the real property sold is residential, ito na. In paragraph P, even if it is a sale by a realtor, if the amount does not go above the ceiling here. Okay, so under the text, as you can see here, 2,000, without yet resorting to the RR, ha? Kasi wala naman kayong, hindi naman kasama yung RR ninyo after the create law, okay, or during 2021. Okay, so never mind the latest RR here. What you can see from the text here is the amount 2 million, which is the threshold beginning January 1, 2021, where your residential house or dwelling is sold for no more than the amount stated here as the ceiling, then the VAT is not applied. Okay, your seller may be a real estate dealer. The sale is in the course of business, and yet VAT is not applied by express exemption. All right. Okay, yung nasa notes nyo kasi 1.919,500, tapos yung 3.1, okay, 2, okay, 3,199,200. Yan yung nasa old notes nyo. Okay. Most recently, binabalik yan sa RR na lang. Pero never mind. Okay, never mind. Not included anyway in your okay, hanggang train lo naman kayo eh. So you see, the sale of real properties here may be VAT exempt, but be sure that the sale involves a residential property. It's not every classification of real property really. If what is clear there is that it is a commercial property or industrial, do not apply this, even if what you may see as the selling price is no more than 2 million. In the same way, a lease of a property may also be exempted if it is residential. Yung ating De La Salle University surely is not a lease of residential but commercial space, di ba? Sa kaso ng De La Salle. Kaya nga, the BIR was really intent on assessing the school for VAT in the lease of, in respect to the lease of spaces within the school campus. Posible ang rentals maging VAT exempt under paragraph 2, provided that the monthly rental does not exceed the threshold here. Okay. As professional lawyers in the future, your services would not be so tax exempt. But there are services that are exempted from the VAT, like in the case of those who are rendering services pursuant to employer-employee relationship. This might be the potential bar problem for you there. Okay, so you might be a lawyer, yes, but who is employed, whether in the government or in the private sector, the gross receipts coming from the employment is not a VAT-able gross receipt. Instead, it will only be subject to income tax. No VAT because the person anyway is not engaged in the conduct of trade, business, or exercise of profession. Okay, so ayan. Okay. Only employees may be exempted from the VAT with respect to gross receipts in the performance of services. And this will be without qualification as to the amount. Kahit pa ang monthly fee or monthly salary is 3 million pesos, if paid pursuant to an employer-employee relationship, VAT exempt. Again, even if the total earnings in a year is 36 million, kung 3 million nga per month, doesn't matter. Okay? So just take note of these enumerated VAT exempt transactions. In your bar exam most recently, the question asked was about the VATability of the association dues or homeowners association dues. Okay, it used to be a debatable issue, no? Some would say it is VAT exempt, some others would not, especially during the time of Commissioner Kim, when for the long time the tax treatment given to association dues was exempted from income tax and from the VAT. Okay, pagdating may yung dating administration, the view was altogether made different. But now there is your train law that expressly considers the association dues in paragraph Y as VAT exempted. Okay, so wala nang issue dyan kasi naisama na sa listahan. Alright, so that will be all for your value-added tax. And sana man lang ay